on job retention schemes, which have been, I think this is fair to say, somewhat at the heart of the crisis response, and they have prevented layoffs, they have cushioned income losses, and they have stabilized overall demand. And we already had a discussion about those job retention schemes early on in the crisis back in March, but we think that with the second and the third wave we are now seeing on the COVID crisis and the economic implications, we thought it would be good and useful to take a closer look at those schemes in this phases of the crisis, to see whether they still well adapted to what is needed. I think we are all very interested, and we are using these instruments because they have been so successful in the financial crisis 10 years ago or 12 years ago. And the question is now whether they are well adapted to what we are seeing today. Are they helping us to cushion the situation, or are they maybe an instrument which is risking to worse, but to hold off change, which is going to happen anyway, and maybe increasing the costs in this regard? To discuss all this, I'm very pleased that we are joined not only by experts from the OECD and people from Germany, but also to really take a look at the international situation and have interventions from France and the Netherlands. And I'm very happy to have a group of distinguished experts which joined us today for this event. And I will try to put everybody on a little bit in the spotlight for the presentation. So first of all, there is my colleague Alexander Hazen, who is a senior economist at the OECD Directorate for Employment, Labor and Social Affairs in Paris. He will present to us an overview in just a minute. Second, I have, now I can't find him here in the list. I have Adrien Perret. He is a deputy director for social policy and employment at the French Treasury, and he will present us the situation in France. I would like to have him in the spotlight, but I can't find him at the moment. But we will do this. We will do this in a minute. But I also have Adrian Zondervan. He's a project lead at the Dutch Ministry for Social Affairs and Employment in The Hague. He will present us the situation in the Netherlands. And then I have, as a fourth speaker, two speakers actually from Germany. It is Lutz Bellmann, who is, in a sense, our partner in crime for this series. He's the head of research for establishment and employment at the Institute for Employment Research, IAB, in Nuremberg. And we are also joined, last but not least, by Anke Jenkel. She is joining us from the German Federal Ministry of Labor and Social Affairs. And here again, the problem is that here is Anke Jenkel. This is going to be our panel today, but apart from listening to those presentations, we will also have ample time to discuss with all our experts. And there, I'm also counting on your contribution. You already gave us some questions beforehand, but we would really appreciate if you were joining the discussion. You can do this in two ways. You can raise your hand in the Zoom application, and then I will try to give you the floor. And you can use the chat function in the Zoom application. Both elements you will find at the bottom of your screen. But before we go into the discussions, we will have our presentations. And for this, I'm now giving the floor to Alexander and ask him to share his screen for this presentation. Alex, you have the floor, please.
Thank you very much. Thank you very much for organizing this event. It's a pleasure to participate. So as Matthias already indicated, I will give a brief overview of job retention schemes across the OECD as they operated during the current crisis. It's based on a recent OECD policy brief that was prepared with my colleagues Andrea Salvatori and Agnes Pumoyen. So let me start at the beginning. So the main objective of job retention schemes is to preserve jobs at firms experiencing a temporary reduction in business activity. They do this by, on the one hand, alleviating a firm's labor costs, and on the other hand, by supporting the incomes of workers on reduced working time. They can take different forms. They can take the form of short-time work schemes that directly subsidize hours not worked, such as the German Kurzarbeit scheme or the French activité partielle, or they can take the form of a temporary wage subsidy scheme that subsidizes hours worked, but can also be used to top up the earnings of workers on reduced working time, such as the Dutch job retention schemes. A common feature of all job retention schemes is that the employment contract is maintained during the during program participation. A key challenge is to design these programs in such a way so that they protect effectively jobs that are temporarily at risk, without, however, subsidizing jobs that do not need support and hence unnecessarily increase the cost of these programs, or subsidizing jobs that have become permanently unviable and hence risking slowing down the economic recovery. So as the COVID crisis took off, all governments have taken important steps to promote job retention schemes in order to limit the employment and social consequences of the restrictions that were imposed on the economy. And so countries with pre-existing short-time work schemes have tried to promote the take-up of those schemes by facilitating access to the schemes, by making widespread use of online applications, by boosting the generosity of the schemes, both for workers and for firms, and by increasing the access of these schemes from not just permanent workers, but also to workers on flexible contracts. Countries without pre-existing schemes have tended to introduce new schemes, either in the form of short-time work schemes or wage subsidy schemes. The new short-time work schemes typically take the form of temporary layoff schemes. So these are schemes that only subsidize jobs that are entirely suspended, where working time is set to 0. Presumably such schemes are easier to implement quickly, easier to operate, but they're also a bit more rigid, and they exclude the possibility of sharing the cost of adjustment across the workforce based on broad-based reductions in working time. A number of mainly English-speaking countries, but also the Netherlands, have introduced wage subsidy schemes that can be used to subsidize hours worked, but also hours not worked. These are reserved for firms with seeing significant declines in business activity. But typically, the Netherlands being exception, the size of the subsidy is independent of the decline in business activity, which has raised some concerns about the way these schemes are targeted. So partly as a result of these measures taken by governments, the use of these schemes was unprecedented. So in May of this year, we estimate the take-up across the OECD amounted to 15 million jobs being supported by job retention schemes. This is about 10 times as many as during the peak of the global financial crisis in 2008-2009. Second, the use of job retention scheme was also widespread across sectors. Again, this stands in contrast to the experience of the global financial crisis. During the global financial crisis in France and Germany, 80% of job retention support was going to manufacturing jobs, even though they account only for 20% of employment. In the current crisis, we see that the pattern, the support of job retention schemes is much more evenly distributed across sectors. So during the initial confinement phase, the main concern of governments was to provide immediate support to firms and workers, with relatively little attention being paid to the fiscal costs and the potential consequences that these schemes might be having for the recovery. So to support firms, many governments set the cost of reducing working time, the cost of hours not worked, to zero, thus allowing firms to reduce labor costs one-to-one with a decline in working time. It's not the case in all countries. So in the Netherlands and Denmark, employers continue to bear some of the cost, but still also in those countries, the schemes allowed firms to reduce labor costs significantly. Importantly, by allowing firms to reduce labor costs broadly in line with the reduction in business activity, this prevented firms from running out of liquidity, prevented firms from not being able to pay their workers anymore and having to engage in mass layoffs. So by providing generous support to firms, job retention schemes have helped to prevent significant job losses and a surge in unemployment. To support workers on reduced working time, job retention schemes also provided relatively generous replacement incomes to workers. So this slide shows that workers whose hours are reduced to zero, so workers who are put on furlough, tend to receive higher benefits than they would get if they were to be on standard unemployment benefits. The difference would be even bigger, of course, if workers continue to work part of the time, because if they work part of the time, they combine benefits for hours not worked with full pay for hours worked. So again, by providing generous income support to workers, job retention schemes play an important role in alleviating financial hardship. And
you're muted for some reason. Maybe you have to unmute yourself.
I'm back again. Okay, so
sorry. Yes.
I'm not entirely sure where I lost you, but I was saying that so they provided generous support to firms. This was important, but they also provided generous support to workers, and this was important to alleviate financial hardship and support aggregate demand. Okay, my screen is blocked. I'll continue talking. I think I'm not sure what I can do.
Otherwise,
okay, yeah, it's fine again. So going forward, so the job retention schemes need to adapt according to the economic and health situation. So in countries where economic restrictions remain in place or they have been reintroduced in response to the second wave, of course, job retention provisions have to remain in place. But once these economic restrictions are withdrawn, we have to adapt the schemes to enhance the targeting of these schemes to jobs that are at risk but viable in the longer time. So if the schemes end up supporting jobs that have become permanently unviable, they run the risk of slowing the relocation of employment from less productive to more productive firms, from declining to expanding sectors, undermining aggregate productivity growth and hindering the economic recovery. So what can governments do to enhance the targeting of job retention schemes? Well, they have a couple of tools at their disposal. First of all, they can make sure that support is temporary by limiting the maximum duration of support. This provides a clear signal that job retention support cannot be a solution to deal with permanent problems, and hence reduces the risk of supporting jobs that have become permanently unviable. Second, governments can require firms to share in the cost of hours worked. This will increase incentives for firms to use job retention support only for those jobs that they believe will be able to recover, will become viable again in the recovery. And third, to the extent that economic activity in some sectors remains curtailed by economic restrictions, but can resume in others, there's a case for differentiating support between sectors, with more generous provisions remaining in place in sectors that remain subject to government restrictions, and adapting the schemes to enhance their targeting in sectors where business activity can resume. The targeting of job retention support can further be enhanced by strengthening incentives for workers. First of all, by aligning short-time work and unemployment benefits, particularly in countries where short-time work benefits are much more generous than unemployment benefits. This will increase incentives for workers to resume normal work schedules as soon as possible, also to look for another job when their job does not offer good long-term perspectives. And hence this will reduce, again, the risk of supporting jobs that have become permanently unviable. Governments can also promote the mobility of workers between jobs that are subsidized to unsubsidized jobs by encouraging workers or even requiring them to register with public employment services, and thereby allow them to benefit from their services in terms of job search assistance and career guidance. And finally, governments can promote training among workers on reduced working time. So this can help to enhance the viability of their current job, for example, by making it easier to telework, or it can increase the prospects of finding another job. Of course, combining trading with short-time work, with part-time work or irregular work schedules is very difficult. And the three countries that we are focusing on today, that actually have been quite active in trying to promote trading on while on short-time work. And so it'll be interesting to hear how they have tried to achieve that. So to wrap up, I think we can say that job retention support was very timely, as reflected by the unprecedented take-up just 2 months into the crisis. As the crisis evolved and economic restrictions are being withdrawn, support has to become more targeted to make sure it really focuses on jobs that are at risk but viable in the longer term. And it's important that job retention schemes remains temporary. So it's unavoidable that there are some people who lose their jobs, whose jobs cannot be protected, which raises the importance of other policies that can promote access to their jobs. So in a nutshell, job retention support has to be timely, targeted, and temporary. Thank you very much for your attention. For any more information about our work on this, please visit our website.
Well, thank you very much, Alex. I think we will move right away to our next speaker, and I'm no, this is moving here at the spotlight. I'm pleased to present to you also now as in video Adrien Perret from the French Treasury, and he has asked me that I will share my screen for the presentation, which I do right away. Sharing. Here we go. I hope you can all see my screen.
Yes, I can see. Do you hear me well?
We can hear you well, so the floor is yours.
Thank you, Matthias. So I'm going to make a short presentation of the job retention schemes put in place in France during the COVID crisis, and then talk also about the link with vocational training in this context. So if you move to the next slide, I will start by describing the different mechanisms during lockdown and after. And then I will discuss the challenge of sectoral reallocation and the tools that have been deployed precisely to foster upskilling of workers during unworked hours. If you go to this next slide, you can see that job losses in France were very significant during the spring, but far less significant than the drop in activity would have triggered without public intervention. As you can see, the orange bar is the drop in activity in GDP, and the blue bar is the drop of employment. So we had, for example, in Q2, which was the peak of the crisis, minus 14% of GDP, whereas employment decrease was limited to around 4%. If you go to the following slide, you can see that the massive use of short-time work supported employment. So during lockdown, it has been designed as one of the most generous schemes in Europe. Employees received a compensation of 70% of gross wage, up to 4.5 times the minimum wage. And the compensation reached 100% at the minimum wage level. And this compensation during the lockdown period was fully paid by public administration. In fact, it was paid by 2/3 for the state and 1/3 for the unemployment agency, which is called the UNEDIC in France. And between March and September, around 17 million employees had a prior approval of the scheme. And at the end of September, around 2 billion hours have been compensated, for an effective cost at this stage of 20 billion euros. And in fact, the French scheme works in two parts. First, you ask for an approval, and then you ask for effective payment of compensation to employees. And as you can see, there was a huge peak during the lockdown, which was quite massive. If you go to the next slide, I will stay a little bit on this slide because it is a description of the various schemes that were deployed before COVID and then during the peak of the COVID period, and then that are expected to be deployed at the beginning of the year 2021 if the sanitary conditions allow it for the sectors concerned. So first of all, I would like to recall that in France, the decision of using short-time work scheme is made by the employer. It is his decision. So before the crisis, the use of partial activity, as we call it, was very limited. The employees' compensation was the same than during the crisis, but public support consisted in a lump sum payment depending on the enterprise size. So you had 7.74 euros for SMEs and a little bit less for bigger enterprises. And it was 6 months long, renewable up to 1 year, with the condition of not dismissing employees using the scheme. During lockdown, the scheme was made more generous, as I just said, and which is justified in a situation where the economy is frozen and people are said to stay home and a lot of enterprises are said to close. However, right after the lockdown, as economic activity was encouraged and deemed to to start again, the scheme was modified and the employers had to pay a part. The employees' compensation remained at 70% of gross wage, but employers paid 15% of this, which corresponds to 10% of gross wage. And there were exceptions, however, for sectors that were still very affected by sanitary restrictions. Namely, for example, you had restaurants, hotels, culture, trip agencies, etc. And they continued to benefit from the crisis scheme. And this modification started at the beginning of June 2020. But at some point, the question is to strike the right balance between preserving sectors that are affected by sanitary conditions without preventing necessary restructurings for enterprises that endure a strong and permanent loss. This is why the schemes are expected to be narrowed at the beginning of 2021 if sanitary conditions allow it and depending on the sectors. So just to recall, during the crisis, the training costs under partial activity or short-time work scheme were covered 100% by the state during this period. So I will move now to the two schemes on the right of the slide. So you will have a new general scheme at the beginning of 2021 with lesser employees' compensation, only 60% of gross wage, and lesser public contribution, which is 36% of gross wage. And the use is very short. It is allowed for 3 months, renewable ones for enterprises that are expected to bounce back rather quickly. And the training are still mainly covered by the state, but at 70% instead of 100%. And you have also a new long duration scheme, which is designed for enterprises that will endure a longer drop of activity, but with a perspective of bounce back in the future, but not very quickly. For example, you can think of aeronautics. So the goal is to preserve key skills and training costs are covered at 80%, which is more than the general scheme, but less than the COVID period. This scheme, long duration scheme, is a little bit more generous than the general scheme, but less than the crisis scheme. You have 70% of employees' compensation with 10% of gross wage paid by the state. And as the scheme can be used during a period of up to 2 years, renewable every 6 months, there are stricter conditions to allow an enterprise to use it, especially, and this is important, there is a ceiling of 40% of hours worked per worker. A worker cannot not work more than 40% of the hours, and the employer cannot decide alone to use this scheme because it needs a firm level agreement. So if you go to the next slide, why such a massive reliance on short-time work? Alex also already spoke about that, because it has a large positive effects on unemployment and on firm survival, especially when you decide to freeze the economy during the lockdown. It has strong effects on liquidity constrained firms that face a temporary demand or productivity shock. And at that time, zombie effects are expected to be small. COVID is a pure exogenous shock, and job matches are to be protected in order to prepare recovery. So if you move to the next slide, but like I said just before, we have to strike the right balance between preserving jobs and not preventing necessary restructuring, and then consider the challenge of job relocation and upskilling. So like I said, the state funds employees training during short-time work through the National Training Fund. For example, it finances formations in new training in new hybrid technologies in automobiles, certification in cybersecurity. These are just examples, but just to make it more tangible. And besides, the recovery plan that has been announced by the Ministry of Finance and Recovery deploys complementary means. People will receive bonuses on their individual training accounts against training in specific occupation areas, for example, digital or health. Occupational changes are encouraged by enabling switches or transitions through new sectors if the certain sectors or jobs are threatened. And the goal is also to enhance the digitalization of the long life training market in order to be more efficient and effective in finding and promoting training. So you can move to the next slide. I briefly described the main mechanism that is used to finance vocational training during short-time work. So you have the National Training Fund, which is the FNE, Fonds National de Formation. It is dedicated to training employees placed in short-time work. It is financed by the government, and it helps to facilitate the continuity of employees' activity and to encourage their transition to new jobs in new professional areas. And we have also a very new scheme, which is collective transition. It is very new because it has been introduced in late October, early November. So we lack of insight on this scheme. It has to scale up still at this stage. But it is a new training program to facilitate and foster transitions for people whose jobs are under threat to not be pursued. And they are encouraged to look in sectors with a stronger potential growth at the local level. It is, however, financed by the National Training Fund, and it will be built around territorial platforms of professional transition where companies and employees will be brought together and experiment reallocation depending on the recruitment needs. And so you see that the coverage of salary and training costs will be depend on the size of the enterprise. So you can move to the next slide. And here I will show some elements on the use of the National Training Fund since the beginning of the crisis. As you can see, it is gaining momentum through the months. Between June and September, it increased. So you see here the part of training for employees in short-time work as a percentage of employees. So it went to 20% in September. Sometimes it is financed by the training fund scheme, sometimes not, because not everybody still knows perfectly well it. So we will enhance the communication on this disposal in this scheme, but it is gaining momentum. And some other facts you cannot see here, but I tell you, training for employees in short-time work is more common in large companies, and this is why in the latest slide you saw that the compensation taken in charge by the state is higher for smaller enterprises. The use of training for employees is more common in manufacturing, transportation, and information communication. Around 50% of employees, little bit more, little bit less, but it is the most intensive user of vocational training in this mechanism. But it is less used in financial activities, construction, or real estate activities. You can move to the next slide, where there are some references on this, and I think I am done, so I will thank you for your attention and will be pleased to answer your question if you have any.
Thank you, Adrien. Well, one question, maybe as a quick follow-up. Can you hear me? Yes. What you presented, in some areas, I had the feeling that sort of the main focus seems to be sort of the preservation of high-skilled jobs and the structures around this. Is this something, did I get it right, or is not?
Yeah, you get it right. In fact, long duration, short-time work, which is a little bit an oxymoron, but it's not so, it's understandable. It is designed to preserve necessary and important skills in some sectors, like, for example, aeronautics, that we do not want to lose during this period. So this is why you have a longer duration short-time work, and it is accompanied with financing of vocational training in order to preserve and improve the skills of the people.
Okay, thank you. I think we can go into more details later in the discussion. And thanks again for this presentation. And we will move to our next speaker, Eddie Zonderan. Let me replace the slide. So Eddie, you have the floor, and the only thing I need to do is now share your presentation, which I do right away. Okay, and put this into presentation mode. I don't know, can you see my slides in presentation mode?
I can see them, yes. So okay, I think everyone can. Yeah, thank you. Good morning, everyone. Yes, thank you. Good morning, everyone. I will try to give a short presentation on the job retention scheme we put in place in the Netherlands as a reaction to the crisis we have at hand. I have some slides with mostly some numbers. I will talk about them, but I will also talk about some other things to give you an overview. We had in the Netherlands, before we started our new job retention scheme, an old one, a short-time working scheme, but that was not something that we could use during this crisis because it was only meant for companies that undergo a certain calamity, and all applications had to be checked manually. And that was not something we could do considering the large numbers we were expecting. Moreover, employees used up their unemployment benefits under this old scheme. So we had to come up with something new. We came up with what we call in the Netherlands NOW. It's an abbreviation for a Dutch word. I will use job retention scheme, GRS, for this presentation. And it is, as Alexander already put forward, a wage subsidy scheme. So we basically subsidize wages in a fairly gross amount in order to retain the jobs and prevent unemployment. We do this through a rather, well, it's a simple formula. The maximum amount of compensation in the first two periods that ran from March till May and from June to September was 90%. Of the wage sum, the maximum amount, and we lowered that percentage to 80% in the following period, the period we are in right now, that runs from October to December. And just like Adrian showed you, we also have a way of going forward starting from January. But before we go to that, this is a small example of how we make the calculation. I mean, the maximum amount in this current period is 80% compensation of the wage sum when you have 100% decrease in turnover or revenue, so to say. With 50, it goes to 40, and with 25 degrees in turnover, it goes to 20% compensation of the wage sum. So Matthias, if you want to go to the next slide, this is a bit more in depth perhaps, but it gives you a good overview of the formula we use. A wage sum of 10,000 times the number of months times your decrease in turnover times our compensation rate, 80% at the moment, times an additional premium, because not all employer costs are reflected in the wage sum. This is 1.4. In practice, 80% of this amount, in this example, 16,800, is paid in advance to the employer as soon as possible, because they are in dire straits. The remaining 20% will follow after the check. We are in that right now for the first period. And this relates to a situation in which no decrease in the wage sum has taken place. And I will come to that later. Matthias, the next slide, please. These are the results so far. We had quite a lot of applications in our first period, 138,000. Somewhat less in the second period. That was after the first wave and the opening up of some sectors. Your guess is good as mine for our current period, because we are in the second wave and a lot of businesses had to close again. So it might be a bit larger, or a larger amount than the 65,000 we saw in the second period. Most of the applications were granted, because we have no reason to doubt beforehand the applications, which are just an employer asking for a subsidy and stating his expected turnover loss and his wage sum. And that goes into the formula and leads to an 80% payment in advance. It concerns 2.6 million employees in the first period. That also relates, Adrian already said that, about around 30% of our working force, and total paid in advance, almost 8 million, which relates to a total of almost 10 in the first period, which is around a little less of 4% of our total annual budget in 3 months. So it's quite a big sum, so to say. Matthias, the next slide, please. This is a table. It looked like one that Adrian already presented in the case of France. The way we're going forward at the moment. You see there the 90% max wage cost subsidies in the first two periods. Our current objective is to phase it out to 80, 70, and 60%. And that goes hand in hand with a possible decrease in the wage sum without an effect on the subsidy, because we put in place some rules. If employers filed on an application for our job retention scheme, they had to keep their wage sum at the same level. So no layoffs there. So 0%. Of course, you were free to do it, but that would have an effect on the subsidy you got. And in the first period, there was even an extra penalty on layoffs or a decrease in the wage sum. However, because we want to gradually go into a phase in which employers and businesses restructure themselves or adjust to the new economic circumstances, which then goes hand in hand with still, of course, preserving as much employment as possible. There is a 10%, 15 and 20% in the coming periods possible decrease in the wage sum without an effect on the subsidy. And we also have a minimum decrease in turnover that you have to experience as an employer. So that is, the limit is 20% at the moment and will be 30. Of course, there's a lot of political debate on this right now. We are now in end of November 2020. January is soon with us. And there are discussions if the 70% is still something you would want to aim for in light of the second wave of the COVID crisis. So that might be a higher percentage, but then you should also look at the percentage of the possible decrease in wage sum, because we also want some incentive for employers to make a turnover. We do not want a 100% risk solely at the hands of the government. So that is something you have to tweak and look upon very, very well. This is the way forward at the moment, but talks as we speak are being held on these percentages and what we should do starting from January. Matthias, the next slide, please. Because we have some main challenges, of course. There were some good points also in Alexander's and Adrian's presentation. The process of payment in advance is relatively simple, although it's a large amount of money and concerns a lot of employers. A bit more difficult and a bit more technical will be the process after this payment, because there's a lot of checks and balances afterwards. And it also means that a lot of employers will be faced with amounts of money they will have to give back to us because their wage sum has decreased more than was meant to be, or because they have less turnover loss than they expected, which is a good thing, but then they owe us money. And it's a difficult scheme to for our executive body, our employee insurance agency, who does this for us. Their capacity is also an important point, because we have, as of yet, 5 periods, and they have to be rolled out, and then the checks and balances afterwards. This is a big job for them to do in a proper way, and that is the reason that we have a big GRS job retention scheme, but with very limited possibilities for specific situations or specific employers with specific circumstances. And that is something we see a lot of at the moment. The way of phasing out the measures, I already touched upon that, is something that we have to talk about, because if you want to raise the percentages again, instead of the 70-60, you want to go up, what happens afterwards? Because that will be a big fall if you go back to zero once again. Of course, it's not our aim to go back to zero, because we want in this mid to long term a more permanent solution, which we can activate when we have another crisis at hand. But that has to go hand in hand with, again, the capacity of the executive body, because a lot of their effort is now on this short-term GRS, and we also need time on our hands to make a more permanent solution. We also touched upon schooling and the transition to other jobs, also in the other 2 presentations. Employers that applicate for this subsidy, they have to declare in their application that they oblige to make a serious effort on the schooling of employees, and to also further the process of the transition to other jobs of employees they might want to lay off. And starting from the 3rd period of our GRS, which we're in right now, there's a 5% deduction of the subsidy if no active contact has been undertaken towards our employee insurance agency, in light of this obligation to redirect employees to other jobs in case of collective redundancies, by the way. And 5% is a fairly serious amount, so they have to look into that seriously. And next to that, there has been there are means freed up of 1.4 billion, which are especially meant for these training objectives and the transition to other jobs. So employees can use that, but then again, they have to do that, and they have to consult with the trade unions also in the event of collective redundancies. There are some other main challenges, of course, and when we go in a bit deeper, maybe there are probably a lot of extra questions or possible questions. This is, in a short overview, our GRS at the moment, and the way forward for the coming months. So I'll give back the floor to you, Matthias, for maybe questions and otherwise the next presentation.
Well, thanks very much, Eddie. Just maybe one follow-up question about the training and the incentive. So the incentive is basically there's the obligation for the employer to basically think about or lay out a plan how they would approach training. And then the incentive is that the payment would be reduced if they don't follow this obligation. Is
not entirely. They have to declare in their application, firstly, that they make a serious effort on this training and the process of the transition to other jobs. They also have means. We freed up means of this 1.4 billion. The 5% deduction is solely targeted at the way that these employers consult with our employee insurance agency, so that we are sure that they know how to use the 1.4 billion and that they are being helped to do that. And we can control afterwards if this contact with our employee insurance agency has indeed been taken place. And if not, there's a penalty or a fine of 5% of the total subsidy.
Okay, perfect. Thank you. So Lutz Bellner has already shared his screen, so I think we will move to his presentation and the one of Anke Jenkel. And we will follow up on the Dutch scheme during the discussion after the presentations. So Lutz, if you want to, Lutz and Danke, if you want to unmute yourself and take the floor, and I will try to thank you, Eddie, again for the presentation, and I'm trying to place you also in the spotlight. Lutz, please, you have the floor.
Anke, you can start, but I have problems.
Thank you very much indeed for having me for this really interesting.
Oh, sorry.
Okay, for this very interesting discussion on how we tackle the COVID problems. Germany has a very long tradition of short-time work, which is an instrument by our unemployment agency and insurance, so that one has to be insured by the unemployment insurance in order to be able to claim it. Basically, why do we have this instrument? It has been mentioned before, in order to keep the employees and the employer together, to keep the trained and experienced people together, for them to be able to start straight away as soon as work comes back. And this is not only there for COVID, obviously, but also if they are in financial or economical distress, like we experienced in the last big crisis, but there might also be minor challenges on the way in between. The next slide, please. Or we can even go one further, I think, Lutz, because that all has been mentioned. We try to make a point that the usual economical responsibilities of the employer have to stay with him. So we cannot cover for him if he was unlucky or not very wise in leading his enterprise. But as soon as there is a substantial work shortage, which is caused by economical reason or avoidable circumstances like this pandemic, which is transitory, doesn't stay forever, and is unavoidable for the employer. Those are sort of the requirements that have to be met. And if at least 1/3 of his employees are affected with a loss of work of at least 10%, then the door opens to claim short-time work allowance. So that when they give an indication to the Federal Agency for Labor, that will be checked by them and they will give a go-ahead or not if these requirements aren't met. Next one, please. Yes, thank you. Who can claim? Any full and part-time employees, no matter whether they're employed indefinitely or for a limited period of time, as long as they pay unemployment insurance. And apprentices who even enjoy a sort of protection shield of 6 weeks. But we now see that other people, like the mini job, scarce employed people for not more than 450 euros per month, and temporary employees, as well as self-employed persons, cannot claim short-time work. So their risk now is covered by an easy and a more open way to social security for job seekers. And that covers them for the time being, but obviously it's a bit of an imbalance. I already mentioned, but I would like to point out particularly because Adrian mentioned something about the agreement between the employer and the employee. It is substantial for German short-time work that employer and employees agree on introducing short-time work. If there is a works council in the company, that will obviously go through them. If there isn't, then they will have to agree on an individual basis. So it will never be done against the will of the individual employee. Then I already mentioned we have the notice to the Federal Employment Agency, and then they will look how much work is there and how much work do we miss. And only at the end of the month, the employer then will say, right, I pay you for the time you worked, and there's short-time work allowance for the time you couldn't work. And he then gets reimbursed later by the Federal Employment Agency. This again explains why we are a bit behind in time to say what is the actual measure of short-time work. Usually, the employer has to pay 100% of the Social Security contribution during short-time work. And that amounts almost to the wage that he has to pay. So that is our permanent incentive to put the employer, make him go back to work. But now in the crisis, as you will see in the next slide, we altered these rules. And we did that in the last crisis with much success, as we find. And so we did this now again, and even to a further scale. So we prolonged the duration of short-time work. Normally it's limited by 12 months. Now it's opened up to 24 months, but limited at the end. So the regime now ends at the end of this year. And the new regime that was just introduced in October now will end definitely in December 21. So anybody who will take up short-time work in the course of 21 will have to, will be limited to 12 months. The 100% reimbursement of Social Security contribution will be split in half by the middle of next year. Again, as an encouragement to get going out of short-time work, make a decision, who do I keep and who do I not keep? And in view of the fact that we had such a high part of short-time work in many industries, where people not only had short-time work for 20 or 30%, but for more than 50%, which means a lack of liquidity in the families, we introduced a rise in the short-time work allowance from 60 or 67 if there's a child, to 10% more in the 4th month and another 10% more as from the 7th month if there is a loss of work of 50%. This is a contribution for the laborers or the employees and their families affected to make sure they can keep up their monthly obligations like rent and whatever you call it, when they have to pay for a credit back to the bank and things like that. And that again is a new moment. We opened up the possibility for supplementary earnings, which are not deducted from the short-time work allowance. That will finish as from the end of this year, and then they will only be able to do one of those mini jobs for up to 450 euros to top up their lack of income. Now, everybody mentioned the use for short-time work for further vocational education and training. Yes, thank you. Our minister made a point already in the beginning of 2019 and introduced support of training of employees. Usually we support training for people who are unemployed, but we opened it up in view of the transition and the transformation that we have, digitalization, as well as decarbonization. And that can be used while they work, but we want to push and motivate to use the time of short-time work for more qualifications. There are fairly strict requirements because we use the monies of the unemployment insurance to pay for this. And there is discussion about the strictness of these requirements. So just last week, in fact, and it will be in the federal Bundesrat tomorrow, there will be a law opening up the requirements for qualifications to be subsidized during short-time work. The subsidy will, or the support will be for the costs of the courses and to cover part of the wages. It's a fairly complicated system, but we hope we have leveled out various incentives now, so that should increase. So thank you very much for the time being. I pass on to Lutz.
Yeah, thank you. To address the consequence of the COVID-19 crisis on the labor market, the IAB started a new employer survey at the beginning of August this year. We asked every third month the employers' representatives questions, for example, about the take-up of short-time work. And as you can infer from the slide, the proportion of establishments in the different economic sectors has heavily decreased during the time of the crisis, and this shows this dynamic that the incentives in the short-time system we in Germany work. For example, in the accommodation and food industry, the proportion of establishment adopting short-time work decreases from 63 to 35%. And as mentioned by Alex, manufacturing was the most important economic sector used in the Great Recession. Now it is on the third place regarding the usage of short-time work. On the next slide, you see that we asked also in the fourth wave of our new survey the establishments about their expectations or their plannings concerning short-time work until the end of this year, and 13% of the establishments answered they plan to attend the usage of the scheme, but also 9% indicated they expect they could reuse the scheme. And in the other direction, asking the companies which do not make made use until October of the short-time work scheme, 84% they do not expect to do that anymore for the rest of the year, but 10% indicated they are considering that as well. So wrapping up the information we gave you, would say that we all the presenters here came with some concerns about the way to leave the scheme, how Eddie told framed it as the way of phasing out the measures. That is something we really have concerns whether it is possible, and we in Germany introduced timely, limited alterations to the rule of short-time work to save jobs and to avoid an extraordinary rise in unemployment. Of course, the prolongation of these schemes is customized by reducing the reimbursement of social insurance contributions and the limit for supplementary earnings. However, we introduced new legislation in order to make skill development during the usage of short-time work more attractive for the employers. And last but not least, we using innovative data about the establishment reactions during the COVID-19 crisis and could demonstrate that a substantial proportion of establishments have already finished short-time work adoption or plan to do so. Thank you very much for your attention.
Many thanks, Lutz and Anke. One follow-up question also to you. The table you showed, Lutz, on the pickup of the short-term work scheme by sector. I found it quite striking that there is such a decrease in the hospitality sector and no decrease at all in the manufacturing. Is there, how do you explain this? Because hotels and restaurants are still very much affected by the lockdown and the crisis. So why are they responding so differently from the manufacturing sector?
Yeah, we do not have a definite answer to that, but it might also be an indication that the crisis in that sector is even deeper and compared to other industries. If we have to find out what the reason because that developments are.
So that's being to continue. So now I would like to thank you to both of you also for the presentation. And now we have like about half an hour for discussion. And for this, I would like to bring everybody back on stage. That will take a while, but bear with me. But while I do this, I have a question. Maybe this is probably something I would start off with Alex. I think this is what one question, or a broader question, which is really looming above all this is how do we differentiate, or how do we understand whether jobs are permanently not viable or whether they are viable in the future? And maybe also the question to you, and I think the schemes we have seen, they don't seem to try to answer this question fully. They try to give incentives to go in the direction, but have you from your research seen any attempt to have this differentiation that sort of government tries to decide which jobs are permanently viable or not viable? Because that's the question behind whether we are holding up structural change or whether we are allowing it to happen even with the short-term work scheme.
Yeah, thank you, Matthias, for this question. So governments, they cannot observe whether a specific job is permanently viable or not, and they should not try to do so. And so that's why all the measures we're discussing is trying to affect the behaviors of the workers in the firm concerned. So if you make short-term work somewhat costly for firms, firms will only use short-term work schemes to support those jobs that they believe are worthwhile preserving in the longer term. If not, they make a cost and it makes more sense for them to lay them off. So it's really about using the views, the inside information that firms have about the jobs to try to make them self-select into these schemes. The same to some extent holds for workers. So when we say that it makes sense to somewhat align unemployment benefits with short-term work benefits, in particular where short-term work benefits are much more generous, workers might be more inclined to also look for opportunities elsewhere. What are my opportunities within the firm in the longer term? What are my opportunities elsewhere? And it provides incentives to move on. It's certainly not the idea. I think it's completely unfeasible for governments to try to determine which sectors or which jobs are viable in the longer term or not. Of course, it still can make sense to differentiate the generosity of schemes between sectors, but that's not so much because we believe that certain jobs are permanently viable or not, but because we have certain economic restrictions that affect certain sectors a lot and others not or not at all. So it's just to compensate certain sectors for the measures that are taken by governments to deal with the COVID-19 crisis. And I'm not aware of any country that tries to select jobs into permanently viable and viable jobs for job retention support.
But maybe also to the other panelists, have you considered or are you considering a differentiation by sector for applying regarding the rules for the job retention schemes, or is this not something? Is this something which is not under discussion in your cases?
We in the Netherlands, we do not have plans in that direction for our job retention scheme. I agree with Alex that it's not feasible to discriminate between what is a job you want to uphold and what is not. We try to facilitate that all over the board with our opportunity to decrease a small amount of the wage sum. So businesses can adapt a bit, but they have to make these choices themselves. We have other instruments in place that can be targeted more directly towards specific sectors, but that is not in the form of our job retention scheme. That applies to everyone all the same. The other measures are more like the amount of money one can get to cope with your with other additional costs you have as an employer. But those are more targeted specifically and not a part of our job retention scheme.
Adrian, would you like to come in on this? Do you have any differentiation by sector?
In France, we have, during the crisis, we had a common scheme for everybody. But as I said, beginning at the 1st of June, we had a general crisis scheme which led the enterprise pay 10% of the employees' compensation in all sectors except those very affected by the crisis, which are mainly restaurants, hotels, etc., which continued to benefit from the crisis scheme without payment from the enterprise. So we have, there is the same scheme, but the public participation is not exactly the same in all sectors. There's a general matter for all sectors except those that are strongly affected by the crisis.
Thank you. I have a couple of questions now in the chat, and I was trying to give the floor to Simon Törl from the Chamber of Labor from Austria. Mr. Törl, if you want to unmute yourself and ask your question, maybe also turn on the camera if you want to.
1 second, I'm working on it. Okay. The first question that was puzzling me was about training and then all those training schemes during short-time work. I want to put it into the context of windfall effects and this bigger topic. As I understand, short-time work is an instrument for limited period during time to prevent layoffs. So that's the idea of this mechanism. And I somehow observed that now we are in a situation where we extend this instrument more and more to subsidies of enterprises. Like in Germany, if you have 2 years short-time work periods or 1 year, and you already combine it to structural change, then the whole instrument changes. Now my question, sorry for talking so long, I try to contextualize. My question is, this whole idea of training during short-time work somehow contradicts the basic idea of short-time work, as the idea is I train employees in a way that they can change the job, that they can go to another industry, another enterprise, which needs more employees and leaves the enterprise that gets the subsidies. One, or the second case would be subsidize the employment costs within the enterprise it needs to employ its employees. But then again, we are in a different instrument than the actual idea of short-term work. So my question, do I not get, do I get this idea about training in jobs completely wrong, or is there a point? And if there's a point, the question would be how to guarantee that in the medium run, enterprises that benefit from those subsidies also pay for them.
Maybe I can. Sorry, maybe I can bring some elements of the reflection on these points. I'm not sure it is necessarily contradictory, because in fact there can be some reallocations within sectors or within firms. For example, if you think of automobile linked with an accelerated development of greener technologies, you might need some training in the same sector, in the same enterprise, to reallocate part of your workers in activities that already exist, but you need to take a little bit more in, for example, thermal car, to put them through electrical cars. For example, it's just an example, but it is something that we can think about. The same can be said regarding thermal renovation of buildings. It may necessitate some training specific to people that already work in the construction sector. And even though some employees are expected to lose their jobs, they can be accompanied in their transition project through these schemes by their current enterprise. And another point important, I think, is that reallocation takes some time. And like Eddie and Alexander said, sectors or jobs of the future are very uncertain, very difficult to identify. Is it really possible to identify? Is not so sure, especially in short run. So there needs to be a progressive phasing out of short-time work support schemes, and tools need to be given to local actors to help them to identify and accompany the transition in the form of vocational training. And this is, like Alexander said, we give incentive to local actors, enterprise, local collectivities to identify and accompany the transition. Otherwise, it would just be lots of job dismissals, which will simply translate in unemployment, classical unemployment compensation. If we cut too soon short-time work, and especially the help regarding vocational training, the risk is that public expenditure will just move from short-time work to classical unemployment, because people do not have the time to make a real transition project.
Okay, thank you. Thank you, Mr. Till. I have another question, this time from Christian Markel. If you want to unmute yourself and ask your question. Mr. Markel.
Okay, thanks for unmuting me. I couldn't do it myself. I would like to start with an observation, then a question. I mean, what I found interesting is that the time path of benefits paid out through the short-term work system is very different in countries. I mean, in France and in the Netherlands, you've chosen a regressive system, so it goes down over time. In Germany, it's the opposite. And so Germany is seemingly not in line with what Alexander Heisen said on aligning with the benefit system. But my question is on a different topic. I didn't learn that much yet about the flexibility over the winter. I mean, what I'm expecting is that we get a shortage of labor in some sectors on a temporary basis. So I expect that in terms of vaccination, elderly care, schools, universities, in principle, we would need more help. On the other hand, we'll have millions of people in other sectors in short-term work. Is there enough flexibility that, say, somebody on short-time work in accommodation or manufacturing can be assigned on a temporary basis to help vaccination or other things? And are the financial incentives there such that this person is going to be willing to do that?
Well, in the Netherlands, we indeed have this discussion because it seems logical to take one group of employees that are not doing or not making all their hours to sectors in which there's a shortage, as you said. Related to this job retention scheme, the flexibility is not that large in our case because it's difficult to put in such a huge system, and as I said, the limits or the possibilities for specific circumstances or specific measures within that are very limited for our executive body. What could be an option is that we know which employers use our job retention scheme, and we could, through the regular communicative channels, implore to them to give their employees to sectors where there's a shortage, but they should do that amongst themselves. We cannot do that mandatory. And then the second question is, what does that mean for the subsidy, the wage subsidy in our case, in itself? Because it is a way, if there is a monetary reward attached to that, there's a scenario possible in which their turnover, the revenue, will rise as a consequence of that, and their wage subsidy will fall as a consequence of that. So there you go, and that is something that every employer has to look on very, very carefully, because in our case, when you get an 80 or 70 or 60% subsidy, then you will probably be better off by indeed lending out your personnel to other sectors, unless these other sectors do not pay you the wage cost that you would normally pay for your employees. So it's a matter of the monetary reward and the consequences that has for the subsidy in our job retention scheme. But the discussion, I know, and is of course very logical because it's something you would want to connect to each other. Yes.
Well, I could probably add for Germany. I think you have to differentiate. For the employers, the incentives are there to start coming back with reducing the social security contributions reimbursement. And for the employees, there is only an enlargement in the amount of short-term work allowance if they really suffer more than 50% loss of work. And as the employees may earn money which will not be calculated against their short-time work allowance, they can go and help out with the vaccination. I do think that would be a very flexible system in Germany.
Fabian, you wanted to?
Yes, I would like to say I agree with what Eddie said. In fact, it is a matter very important, but this is why precisely we give incentive through vocational training schemes in order to let people, employers, employees to reallocate between them. We give them the tools to do that, but it is difficult to do it at the state level directly.
Thank you. Thank you, Mr. Michael. So let's move to the next question. I have Alexander Herzog-Stein and ask you to unmute. I think you could unmute yourself and ask your question, please.
Yes, I have unmuted myself. Thank you very much first to all the panelists. I'm Alexander Herzog-Stein from the Macroeconomic Policy Institute in Düsseldorf. I wanted to ask a question to Lutz and Anke Jenke first. Have you, you didn't present it, but one also specific mechanism we have in Germany, and I would be also interested whether this is the case in the other countries, is that companies have to apply for short-time work, and then it is agreed, companies first do pay out the short-time work money, and only later they can reclaim it. So in terms of liquidity, it is definitely a commitment with respect to the company has to make, because first they have to pay in advance, and then they might get the money back if they fulfill all the all the requirements. So it would be interesting to see whether Lutz and others have looked at this mechanism. I haven't found anything on that in the literature so far, and the question is how the other countries do that. And also let me look about it. I know, and it's interesting because Mr. Merkel was here a moment ago. In Germany, after the Great Recession, there was a big debate about, or there was a debate among economists about the discretionary part of short-time work in Germany, which has a tradition that every recession the government tries to adjust our short-time work law to the specific requirements of the crisis. And there were some suggestions from Christian and others that we should make a rule to this discretion. What do the panelists think? Does this crisis of COVID, which is so singular, not show us that this discretionary part of short-time work is quite crucial to stay flexible in adjusting such an important tool? And a final comment with respect to the difference between the take-up of short-time work over time in Germany. I don't find it that surprising that the short-time work use in the hospitality sector went down much quicker. These are smaller companies with a smaller capital base, and it will be much more interesting to see whether they will be able to take it up in November and December again. I think this will be the huge challenge, the second wave, whether we are really successful in this crisis in safeguarding employment, because historically they never before took up short-time work in Germany. So that was the success of the first half of the year. Thanks a lot.
Well, thank you. I think maybe Lutz or Anke, you want to go in first on the discretionary part? I think that's an interesting aspect also for the German debate.
Yes,
yeah.
that.
Okay. Okay. Yeah, Alexander, now you are right. We have that element. I think it's good to have that. We do not have enough time to investigate how that worked in practice. There might be some problems. We have collected the data first and think we should look at that later, because the times are that dynamic at the moment that it is difficult to, or impossible, let's say, to ask at the end of this year all the establishment what their experiences were during the last year, because they say, oh yeah, what do you mean in August, in July, or in March? And we cannot remember very well, because time was so different during the course of that pandemic. Anyway, I think we have a lot of discretionary elements in the German system, and I'm proud belonging to the Bundesagentur für Arbeit, where many colleagues did a really great job administering all the applications for the scheme. And we had more than 6 million of applications to that system. And we always tried to figure out whether it was a temporary loss of work, whether it was the other prerequisites shown to you by Anke were fulfilled. And that is very important in the system. And I think we did a good job on that. And we even are doing a good job in the further training side. And just to come back to Adrian's presentation, he told us that in large companies in France, 21% of establishments used the training scheme. In Germany and in smaller companies, it was much lower figure. In Germany, every third company which uses short-time work allowances adopted a training scheme for employees to use time during short-time work. And it is always something which had be applied for and which would be given the discretionary decision of our colleagues in the employment agency. This is a really hard job, but we try to avoid by this the short-time work allowance become something permanent or something that could be used for measures the establishment would have taken up anyway.
Thank you. Anke, you want to come in as well, or Alex?
From a legal point of view, we do have a lot of discussions now in the parliament and with the parliament, whether or not it is for the ministry and the executive to decide to adapt certain system, or whether that should go through parliament. After the last crisis, we had some rights for our minister and for the federal government to change the law by ordinance rather than participation of the parliament. And there is a big discussion. And we've got it on other fields like the health law issues at the moment very strongly. So I must admit, not familiar with the work of Christian Merkel, and I will certainly read it up, please forgive me. But that is an impact from the parliamentary side of life. Thank you.
Thank you. Thank you, Mr. Herzog-Stein as well. I think we are almost at the end of our session, but before we close, I think I would like to give all our panelists sort of a chance to give a short wrap up from their side with a very specific question. If there's anything you took away from the systems, the other systems you've heard about, if there's anything you find inspiring, you would like to look into from your side. And I would start maybe with Eddie, if you want to come in on this, and then we would go to Adrian.
Yes, of course. I will keep it short. Very interesting points also from Alexander, Adrian, Anke, and Lutz. And we already touched upon it briefly that Alexander pointed out it has to be time limited, and maybe we can differentiate between sectors. Well, that is something that is quite difficult. We had that part already. And what I saw in Adrian's presentation was that they, starting in the new year, already have they phased out their percentages, but they're already going up again, looking at 21, and that is something that we haven't done yet in Holland. And these talks are being held right now, as I said, and that is something we will have to look into in the coming few weeks, going into the new year. That for my part, I enjoyed the discussions and the presentation.
Thank you. Thank you very much. Adrian, please.
Yeah, thank you, Matthias. In fact, I enjoyed the discussion too, and I was pleased to realize that we were not the only one to think that it was very difficult to identify the jobs of the future, and that we are all asking ourselves the same question and see the difficulty of bringing an answer. And so I'm very glad that the recommendation is to incentivize the people to adapt their behavior, but we have not a magic tool to magically reallocate people from one sector to another. And I think an important point also mentioned in the discussion is, in fact, the discretionary part versus the rule. It is important to have a rule, like has been said, with a timetable. This is why when I presented the different schemes with different parameters and different conditions, we can see that we have a cap, something where we go and we can see where we go, but it needs some flexibility after all in order to be adjusted to sanitary conditions if necessary, if there are unexpected events that happen again. But it was very interesting to have exchanges with you today. Thank you.
Thank you. I would now give the floor maybe to Anke or Lutz. Who was Anke? You would go first.
Okay, thank you very much indeed. I took it was very, very interesting. Thank you everybody for his part. I am particularly moved by the question of qualifications and short-time work. And I wonder whether the French system has a lot of advantages where you just have sort of a big pot and as from what I understood of money and people can claim, and then that's fairly straightforward. I have a feeling there is lessons learned for us or to be learned. Thank you.
Something I would like to learn even more would be about these transition collective mentioned by Adrian. I think it's a really interesting ideas in that concept, which could be applied maybe in other countries as well. And it gives us a real justification for considering job retention schemes, because it might be better to work together within teams or collectives for a longer time, especially during the crisis, compared to the situation that persons are laid off, becoming unemployed, and having to look for a new job after the crisis. Thank you.
Thank you. And last but not least, Alex, I mean, it's at the heart of the OECD to exchange on best practice. So you have the last word in sort of seeing what you take away from this discussion, and maybe also how it might take our work in supporting countries taking further.
Yeah, thank you very much. I enjoyed this discussion also very much. I'd like to make 3 points. One very quickly about the reimbursement of the subsidy to firms. In some countries, this can take a long time. I think that's unnecessary. I mean, we can do online applications. In many countries, the approval is almost immediate. And if there's an approval, there's no need why the reimbursement takes such a long time. Of course, there's the example of the Netherlands where they actually try to anticipate to some extent the cost where this is possible. There are also countries where actually the payment is made directly to the worker. So that's interesting in a way because the firm does not have to advance anything, but it also puts the burden for the application and getting the support on the worker. So Belgium is an example of that. Then on the discretionary part, I mean, this is a very important question. I mean, it's very clear that given the level of uncertainty, discretion is crucial. I like the example of Ireland. I mean, they make use of a Corona dashboard, and so they're very clear about the way, you know, given the sanitary situation, what are the government restrictions, and what are the government support measures that come with that. And that's quite nice because it's a bit more flexible than a timetable, because we never know exactly how the health situation is going to evolve, but we know that if the health numbers go in a certain direction, then that's the kind of restrictions they get. And in the case of job retention scheme, the generosity of the subsidies varies according to the level of restrictions in the economy. So I thought that was quite a nice way of providing sort of clarity without a very tight timetable that you might, you know, that gives some idea of where you want to go, but you also have to adjust it depending on how things evolve. And then finally on training, I mean, I must admit that during the global financial crisis, this was an issue that was discussed a lot, promoting training during short-time work. I was very skeptical of it then. I thought it was, you know, interesting to talk about. It sounds like a nice idea, but really it didn't work. And as far as we know, take-up was really low. I'm much more positive this time around. I think a lot have changed in the last 12 years. I mean, we have digital technologies. We can do digital courses online, remotely, individual. There's much more flexibility there. And so when we had the lockdown here in Paris, many schools closed. Teaching couldn't continue in many cases, but in some schools or for some subjects, it was the teachers were giving actually online teaching and things would continue almost as usual. And so providing a bit of training to facilitate the telework, to invest in the infrastructure will be a way to invest in the current job and to manage things much more smoothly. So it is possible. I mean, it's of course, it's also possible. It's also important to invest in training to promote transitions, to make sure that to increase the opportunities of workers. So I think it's very interesting that countries are pushing for that. I'm quite encouraged by France with 20% take-up in September. I think that's very high, if I saw the figure correctly. So I think that's impressive and it's encouraging, and so of course that's subject to a subsidy of 100% of training, so it comes at a cost, but it's very interesting to follow that going forward. We of course continue our work on job retention scheme, and we're preparing now a chapter for the next employment outlook that will come out early next summer. So thank you very much. I very much enjoyed the discussion.
Okay, thank you very much. So more insights to come. I would like to thank again our panelists for their interventions, for being with us today. And of course also all the participants we had in this webinar. It's the first time we did such a webinar sort of with such an international intake and in English. So I'm also very happy that this worked very well. I must also apologize that we didn't take up all the questions we had in the chat just for time reasons, but if your question is really burning, please get back to us and we will be happy to pass them on to our panelists, and I think they will also probably get back to you on this. Before I conclude, I would also like to tell you that we will, as always, document this, this session on our Berlin Center blog. We will keep the video. We have a recording. I hope you are fine with having the recording, you on the recording there, and we will also have the presentations. Yes, so thank you again for the participation in this lively debate, a very important topic, and we hope to see you soon at a different occasion in this joint webinar or another any other event in the virtual space. Thank you very much, and enjoy the rest of your day. All the best.
Enjoy.
Thank you very much. Bye.
Keep
Bye-bye.
healthy. Bye-bye.